Good morning, everyone. Good morning. Good morning. How's everybody doing this morning? We get the screen up. Morning, folks. Welcome to our last trading day of the month in our Microefutures room. Hope you all had a good weekend. Let me know if you guys can hear me. Hey, Jiraj. Hey, Zazu. Hey, Kevin. How are you? Good, good. We got the chat fixed for YouTube. Yeah, no more black box. And hopefully the delay has been fixed since this morning. Our guy was working on it. Yeah, chat's working nicely. The delay seems to be a bit better. And we want to thank EAS for helping me fix all this yesterday. Much appreciated. HD setting at YouTube. Does it look good? We'll see. Yeah, the delay is not too bad now. The delay is not too bad. Yeah, this morning it was a little long, but it seems to be working nicely. JJ, as JJ figures out technology. So let's take a look and see what we're looking at, folks. This is a very interesting last trading day of the month. Our overnight inventory is what we call 100% short. And let me show you what that means. Hey, Dan. Okay. It was like 25 seconds this morning. So, yeah, depending how where everybody is. Yeah, and the rectangle is gone. So our overnight inventory is 100% short because the market now if you look at the close of yesterday, or Friday, I should say, all of the trades are gap lower. Hey, Eric, how are you? So we're looking for a move higher to correct, right? We've had a bit of a move higher. Yeah, and folks, let me know what the audio is like. Phil saying it's choppy. I'm sure they'll tweak the settings. Maybe I'll just talk less. How's the audio for everyone else? Okay, well, mixed results. All right, I'm going to get on with it here. Let's get to work. So we've already had a decent move higher to correct overnight inventory. That's this. Off of the lows. We tagged VWAP and the sellers stepped in. Okay. We'll work on the settings, folks. This is the first time I'm using this OBS. So let's see. We'll tweak it. So we right now have distribution. We had accumulation of product, and now we're having distribution under VWAP. Because right now we don't have the order flow to get the market up over VWAP, up over 55.77. So there is a distribution here. And what I'm watching is I'm watching these lows right here at 55.67 to see if the market can hold 55.67 going into the open to make another run at VWAP. Okay? Today is the last trading day of the month. So what that means is don't take anything for granted. Okay? Don't take for granted that there's going to be follow through, especially if we're the buy the dip, look below and fail traders. Look below and fail traders have to be very careful on days like this because the inventory is all above us, right? Which means there's supply that is trapped long on the last trading day of the month that is pushing lower, right? So let's see what happens. We just did a little look below and fail of 55.70. So if you picked up a few contracts here at 71, 72, make sure that you do sell into strength because we're going to have a seller. Offer some out at 75. If you can't get out at 74 and 3/4, 75, tells you that somebody's front running you, right? So I grabbed a little at 73 and I put one out at 74 and a half and they took it. They didn't take the 75. So I'm going to move that next contract down to 74 and 3/4 and they took it there. When you are long and inventory is above you, you must sell into strength. If you don't, somebody else is going to grab your customer. Yeah, we'll work on the delay. I noticed too that it is a bit longer. We'll tweak the settings. So what I did was I bought a little right here. My stop was here, and I'm selling it here. I'm selling it before my level, and I'm selling it before VWAP. Make sense? Folks in the room? So also the news cycle is going to make order flow a little unpredictable. What does that mean? Well, it means that you really should not count on things being normal and stable. So you're going to have to be a little quicker on your toes. Right? So you're not just, don't, close your eyes and go long kind of thing. Do you know what I mean? You guys in the room hearing me? Right? We have to trade given the conditions that we are given. Look, there's a seller. Do you see where I was selling? This is very helpful if you want to trade and actually have some tactical knowledge. Look, there's a seller. The top of those 3 1-minute candles. The sellers were engaging at that level before 76 and a quarter. So if you were long here and you didn't sell up here, now you're back to your entry point. Right? So if you are long, you must sell into the buying that is caused by a lack of supply. Because inventory is above us, right? It means that that supply will enter quicker, right? The lack of supply move higher will not last as long, and it will not have as much follow through. Exactly, Eric. The good old days of closing our eyes and going long when we were making a new high every day, that's right behind us, right? So now we have to be faster. And there's still a seller at VWAP, which is 55.77 and change. Okay? That's why I love using a 1-minute candle chart. With that bid-ask indicator on it so I can watch the offer, the ask. The ask is the lowest price they're willing to sell at. And if it's moving lower, that means prices competing. Now, somebody earlier was asking about large orders on the depth of market and those orders moving lower and lower. That's exactly what I'm talking about. Now, if you don't have a DOM, right, a lot of traders don't have it, and instead of spending extra money, why don't you just watch the offer? It's simple, and then it's also not as confusing, right? So you're just watching a line, and if that line comes to another line and lifts, that means there's buyers. If it goes underneath that line, it means it's trying to capture the buyers that are there, and there's price competition. Yeah, this is a question I get from retail traders. Would it be good to know where large pockets of liquidity are? I would not waste my time with that unless you're trading like 500, 1,000, 2,000 ES contracts. Liquidity is a very misunderstood concept. And people like throwing that term around a lot because it makes them sound like they know what they're doing. I'm not talking you, Dan. I'm just saying that that liquidity term, right, is thrown a lot. But the thing is that can move around very quickly. Would you care more about the actual transactions or about expressions of interest? Like if you were looking at car sales, would you care about how many cars were actually sold, or would you care that 5,000 people looked at a car but nobody bought it? Does that make sense? Hey, ZR1, how you doing? Let me know when you're around this week. Dan, does that make sense to you? You want to look at the actual transactions, which is what the chart is telling you. The DOM is an order book. So 5,000 people could be bid at 55.71 half, but when you get down there and if those bids disappear and there's no transaction, then that information was absolutely useless to you. Does that make sense? Can you guys hear me? Can somebody in the room answer? Hello? Testing. Can you guys still hear me? Yes. Actual trades, actual transactions. Everything else is all just BS. I could come in and say, hey, I want to buy 5,000 contracts. And then the market could move up and I would just sell into it. So my telling you that I wanted to buy 5,000 contracts is a lie. Does that make sense? That's why order books are meant to be manipulated to create a picture, right? Yeah, and guys, you just using the word large orders for liquidity. You guys really don't know what liquidity is. Liquidity is the ability to transact size without adversely affecting price. So I have to sell 1,000,000 shares of stock. Is the market liquid enough to absorb that selling without knocking the stock down 30%, 40%? Right? Liquidity is one of those terms that retail traders, they don't really know what it is because they've never actually used liquidity, right? Try refreshing your YouTube, Zeth. We'll work on the settings. Let me see here. I don't think I could work on the settings on the fly. Right? So don't get sucked into all that. So what you want to do, so how do you actually trade to make money? Because we can throw around terms like liquidity, unfinished business, um, you know, constipation, all of these terms, we can throw these things around. But how do you actually put money in your account? Well, what you do is you have a business execution setup that allows you to profit when supply runs out or when supply is introduced. Wrong question, NTZR1. We need to have a chat. When are you gonna, when are you going to reach out? This is the worst time to swing trade ES on month end ZR1. Because we don't know where that swing spot is. And you want to swing short ES on a daily or a weekly, or what's your time frame? Brother, reach out. I'm going to DM you. All right? Yeah, we'll talk right after EAS and get the settings fixed on this stream. And thank you for all your help. So use this. So if you see a seller at 76 and we get up there, right, and you do a look above and fail of 76, then you do the look above and fail. I would wait for you, the way things are, I would wait ZR1 for it to go from one color to another. Right? So right now we just did a look above 55.70. And if we're failing now and moving lower, you'd be shorting this level, and where would your stop be? Right? Your stop would be right here. 71, 71.5. You'd be short here underneath 70. Your stop is 71.5. You see that there's going to be bids at 68. So put a buy order there, and if that buy order does not get executed, close your short. Does that make sense? Right? So say you short 4 contracts under 70, and you buy one back here at 68, right? Put your next buy order down here underneath, right? See, look at the buying that's coming in off that standard deviation. So, unfortunately, you can't just take trades and close your eyes in this market and hope that they work out for 20 or 30 points. You've got to babysit those trades, especially on the last trading day of the month. Okay? So, another reason why retail traders lose money all the time is because they take unnecessarily large and not intelligent risk at times that they shouldn't. Right? So the last trading day of the month is when you're supposed to clip in and out of things because there's business going on that you're not privy to, that you don't understand, right? And there's no sense of urgency because if you were working in a firm or if you were on a trading floor, somebody would be elbowing you in your chest to push you out of the way to put an order in. Here it all looks nice and family friendly, like the teacups at Disney World, right? But if you were actually doing real business, you'd be ready to cut somebody's throat out to grab their buyer. And retail traders do not have that sense of urgency. That's why they have this lackadaisical attitude toward risk, right? Because there's no sense of urgency until after they blow up the account, right? Or lose ungodly sums of money, right? You need to have a sense of urgency in your trading. Now, that doesn't mean you need to get upset about everything, but you have to understand that there is business going on and you want to take advantage of that business without getting your face ripped off. So because we are undercapitalized, right, you have to be smart, right? So if I was short under 70 and I see that, and say I covered 2 out of my 5 contracts, right? I'd put a bid in at say 65 and a half, right? So you're short 5 here, and you covered 2, put a bid right here. Because if the market goes underneath that standard deviation and fills that bid, that means that sellers are competing. Because if sellers are not competing, why are you short? It can be insanely weird. It can be very, very calm. The thing is, I am listening, we don't know. Right? It's like the Forrest Gump day. Life is like a box of chocolates. You never know what you're going to get. Right? You don't know what you're going to get. So you, as an intelligent business person, must think, oh, if it could be unpredictable, it could be, nothing could happen. It could be boring. Right? But what if this thing jumps off? Then I should manage my risk. And what you should be thinking today is, you know, all that money I made this month, I'm taking it out of my account. So I don't do anything stupid with it today. Definitely, DJ Trader. The set of characteristics are small, choppy candles. Sometimes business, like here, is a great question. Here, this is all wholesale business. There's nothing for you to do here, right? When it does a look above and fail, that's your business. Now, that business might not be that great. See, look, if you had that bid there, it would have gotten filled. Now, you see these candles here? I would bid above that. And if it takes the tops of these candles, if we lose this seller, you're going to go, right? You're going to take your money and go, right? Because that's your backup there. 69 is your backup seller. So a lot of the times, if you look at the video we did this morning, you'll see there are a lot of times in this market where we really should not be in there, right? And that is what I call market awareness. In our room, we have a video that I did about 3 weeks ago, and it's a market awareness checklist, right? So I'm focusing on these setups to avoid you from over trading, right? Because most traders, if you have a setup that works, right? Like Steve, when he's trading, has a 9 EMA setup. That works for him, and he's tested it. But I'm talking for new people, stick to the basic setups. And that way you will trade less, which means you'll make less trade errors, right? Because you're only going to trade when the business suits you, when the business fits the way that you do business, right? You want to do business on your terms, right? I believe, right? So I'd be covering the rest of my position down here. So that's how I would manage that trade of short 70, short 69 and a half. I'd be covering into these 64 3/4 65s, right? Clip in and out. If you have a larger account, use the levels to let you know whether you should be in the trade or get out of the trade. Okay? So say you were short 10 contracts, right? You're a larger trader and you're short 10 here. And you covered a few here. Before the standard deviation, you covered 2 or 3 underneath. You covered 2 here, right? Well, it should be +2, right? Put your buy orders in and let the market hit you on the way down. That depends on your level of skill, DJ Trader. So if you want to sit out an entire session, say you're brand new and you have no clue what you're doing, right? And it's the end of the month and the market's really choppy and you don't know what a trade setup is, then sit back and watch. How do we know if we get a correction, Assad? We'll get a move up. We already had that move up and they sold into it right here. See that? So I'll be looking for that 55, 57, and then the low at 55, 52. I would like to see the low get tested of the overnight. So let's see what kind of a move we get. We know we have sellers at 69. Watch. There they are. If they see buyers, they'll lift their offers. Next offer up will be 72 and 3/4, and this is a overnight inventory correction. Right? So the market opens, and there's some buyers. Now I'm looking to see if we catch any bids at all. If we don't catch any bids at all, there's nothing bid here. Watch the offer. The offer should, if we get some decent bids, the offer should get up to that 68. If we don't, we're going to turn around and hit that open. Watch 68. Here we go. Here we go. See? There's that seller. They're right there. There's the test of the open. I told you that was going to happen. There it is. If we take out that A low, we're going to come and test the X low at 62. No, there's some responsive buying there. If we take out the 67 and 3/4, look for those sellers right at 69 again. Okay? See? We're supposed to get a move higher. If overnight inventory is so short, we should get a move higher. But that's not happening. Every time we get up to that 69.70, whammo, they hit us in the face, right? What is that telling you? Tactically, what is that telling you? Right? It's telling you that there are sellers and they're competing. Why are they competing? Because they've got to push price lower. There's 62 to the tick, right? Found some buying, and they're going to sell into it again at 65. There we go. So, market awareness, inventory's above us. Market awareness. It's the last day of the month, right? We're not getting that inventory correction, right? Yeah, it is the open. We're only 3 minutes into the open. And the inventory corrections can take time to happen, right? Doesn't have to happen in 30 seconds. Looking for 57, bang, there it gets hit. Now we're going to look for the overnight low. If the market takes out that overnight low, do not stand in the way and try and buy it. Yeah, we'll work on that. We'll work on that, folks. Yes, my data is updating real-time EAS. If this doesn't work, we'll just we'll figure it out. It's only our first day with it, so be patient with us. Okay. Look below and fail of the overnight low. PMI in 10 minutes. Was it a quarter to, Jam? So if you're long on the look below and fail of 52, please sell into that 55.54, right? Yeah, I could see that my YouTube chart is frozen. I'm using another computer to monitor it, so